It's in a holding pattern, right? It's around 20,000. It hasn't really moved for quite a while. Even the network growth is kind of stalling a little bit at about, I think it's about 48 million or so addresses with a value greater than zero. And I think Bitcoin is just waiting around for the macro narrative to improve, I think.
More warnings coming from financial analyst Peter Schiff. He was one of the first economic commentators to predict the 2018 economic recession, and he's back, warning of an impending economic collapse even bigger than the last global recession. This time, he says Bitcoin will be swept away as he describes the world's foremost cryptocurrency as a mistake. Welcome to this episode. Subscribe to this channel if you want to stay updated on the latest market situations, and for cryptocurrency updates. Let's listen to Peter Schiff as he talks about the economy and what to expect.
I always knew that the problem was the government had unleashed this massive inflation tsunami. I just didn't know, when it was going to hit. I thought it would have hit sooner, but they did QE1, QE2, QE3. They printed all this money. We had massive budget deficits. We created a mountain of inflation. But nobody cared about the inflation because all they did is look at the CPI and they said, well, it's not going up more than 2%. And part of the reason for that was the way they rigged the numbers. It really was going up more than 2%, but it wasn't going up 10%. Maybe it was going up 4 or 5%, but they could fudge it enough to make it look like it was going up less than 2%. But after we kicked the, monetary, heroin into a massive overdose after COVID, right? We just went crazy with the money printing, and we sent everybody home and had people not work. I mean, that really brought everything to a head.
By March 2021, the U.S. government had printed an additional $13 trillion, all within a year. $5.2 trillion was spent for COVID-19 relief programs. $4.5 trillion went into stimulating the economy, and $3 trillion was spent on infrastructure. This is the biggest spending in the U.S. history, perhaps in human history. World War II had cost the U.S. $4.7 trillion. When adjusted to today's value, that's $500 billion less than spending for COVID-19 response programs. This magnitude of government expenditure is what has got Schiff worried. With so much money being released into circulation, it was indeed a matter of time for inflation to set in. But the government is not slowing down. President Biden has laid out several plans that would further inflate government spending, which could be counterproductive to the deficit reduction the Federal Reserve is pursuing. Peter Schiff says the current economic upheaval is due to money supply increasing exponentially over the past decade. While CPI, the index that measures the rate of inflation, had been very low over that period, it was only a matter of time before it spiked. And we saw that spike this year. He warns that this is not the end of the road. Inflation could return, and an eventual recession would be necessary to reset the economy.
So now we're experiencing the consequence of the inflation I've been warning about for more than a decade. And this is just the tip of the iceberg. It's going to get a lot worse. The 8%, 8.5% year-over-year inflation that we've seen is going to go much higher. The Fed is not going to be able to fight inflation. It spent the last 10 years or more creating inflation. And there's no way they're going to get rid of it, not unless they're willing to allow a much worse financial crisis than the one we had in 2008. Not unless they're willing to allow a far greater recession than the Great Recession we had in 2008, 2009. And in order for us to get rid of inflation, the government is going to have to get rid of the budget deficits because they've been paid for with inflation. So we have to have massive cuts to government spending and maybe big increases in taxes, not on the rich, but on the middle class. On average, Americans are going to have to pay much higher taxes.
The U.S. GDP fell by 8.9% in the second quarter of 2020. It was the biggest drop in 70 years the country had seen. The U.S. deficit rose from $1 trillion to about $3.2 trillion that year alone. The U.S. deficit to GDP ratio puts pressure on the economy, as debts lead to devaluation. Just recently, the U.S. debt reached a record $31 trillion. That is an $8 trillion rise in just 2 years. The Committee for Responsible Federal Budget estimates that Joe Biden's government alone had added $5 trillion to the U.S. deficit since assuming office. with the Inflation Reduction Act and other stimulus programs like the Student Loans Forgiveness Plan, which is expected to gulp another $400 billion into the pipeline, it is likely that government spending may not go down as drastically as needed.
But unfortunately, Bitcoin's going down with it. I don't know. I feel really bad for you because I've got your, you're thinking right about economics. You kind of understand that, and I see some of your talks, and yeah, you've got that down. You understand, the Austrian economic angle. You know what the mistakes are.
That's right.
But you're fixated on Bitcoin. Bitcoin is another mistake. You got to understand that there's no substance there. It's not gold. It's not digital gold. Why do you think Bitcoin is still at 19,000? Despite all the money that was spent hyping it up in 2021, despite that run up to near 70,000, look where it is. Why do you think the Grayscale Bitcoin Trust that used to be at a 30% premium is at a 35% discount? Do you really think institutions are adopting Bitcoin when they're trying to unload it and that fund is trading at a 35% discount? The fund is down 80% from its peak. Is that a store of value? Is that a safe haven? No, it's not. Bitcoin is a highly speculative asset, but what the hell are you speculating on? Because there's nothing there. There's no fundamentals there. You're just speculating on a greater fool. That is not what you want to do. If you're really worried about the monetary problems and inflation, and you're looking for a store of value and a safe haven, you don't have to reinvent the wheel. You've already got one. You've got real money. You've got gold. You've got silver. You've got monetary metals that you can own, and you've got other assets that you can own to protect you from inflation. You will get no protection from inflation in Bitcoin or any of these cryptos. All you're going to do, if you buy Bitcoin right now, all you're doing is helping somebody else get rid of their Bitcoin. The winner in that transaction is the seller. The loser is the buyer. And the biggest loser is whoever buys the most and gets caught holding the bag.
Bitcoin enthusiasts such as Michael Saylor, Cathie Woods, and Lynn Alden have predicted that institutional investments would rescue Bitcoin and put it back on the growth path. But Peter Schiff is pointing out that institutional investors are actually pulling out and selling their cryptocurrencies. Grayscale Bitcoin Trust, GBTC, is one of the oldest and biggest traded Bitcoin trusts in the U.S. stock market. GBTC has 635,240 Bitcoins in holdings with a current valuation of $12.8 billion. The company's shares are backed by Bitcoin in an investment package that enables institutions and individuals to invest in the cryptocurrency without having to deal directly in Bitcoin. Before this year, GBTC had always traded about 20% premium, but it is currently priced at minus 35%, and that is a 35% discount to the current Bitcoin market valuation. This discount shows how bearish institutional investors are about Bitcoin at the moment. Peter Schiff strongly believes that Bitcoin would not last, because he thinks the cryptocurrency is not backed by any business. Subscribing and clicking the like button would be great, so do that now. Watch out for our next video.